Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis. The U.S. is seeking answers on whether China's DeepSeek got a hold of restricted Nvidia chips through Singapore using third parties. President Trump set to unleash his first wave of tariffs on Saturday with Mexico and Canada as the opening targets. Trump also suggesting he's still planning to impose new levies on China. And India's government expected to focus on boosting consumption in the upcoming budget with potential income tax cuts and increased welfare for rural areas. Across Asia, we're keeping an eye on those tech stocks, especially with a catch down when it comes to South Korean stocks. Of course, we had some disappointing earnings results from Samsung, especially when it comes to their chip division. But sources now saying that they have obtained approval to supply a version of their fifth generation HBM chips to Nvidia. We're also following SK Hynix, which is losing about 10%, but this, of course, after a 20% plus gain this month alone. Of course, they're the leaders when it comes to these advanced technologies. Broadly across Asia, we're seeing also volatility and some of those gains being pared back. And given, of course, the uncertainty coming from cheaper AI skills coming from China's DeepSeek. Officials from the FBI and the Trump administration are set to be investigating whether Chinese startup DeepSeek got around U.S. export controls to acquire advanced Nvidia chips, possibly through third parties in Singapore. Our chief North Asia correspondent, Stephen Engel, joins us now. And Steve, of course, the first question is, are U.S. export controls really efficient here in trying to achieve what Washington wants? What do we know about this investigation?
Well, we do know that the Biden administration has been trying to close those loopholes, so to speak, where intermediary nations funnel these banned chips to China through third countries. But this is where Singapore perhaps comes into the crosshairs right now. And we've known that authorities in the Biden administration were investigating the linkage to Singapore, among other possible intermediaries. But this is coming from sources that the White House and the Federal Bureau of Investigation, the FBI, have been investigating whether DeepSeek bought advanced Nvidia chips through middlemen. We don't know which middlemen in Singapore. And essentially, that would potentially violate a U.S. ban on sale of such chips to China. This is in addition to what we heard earlier this week, that Microsoft and OpenAI have launched their own investigation into the possibility of whether data output from OpenAI's technology was obtained in an unauthorized manner by a group linked to DeepSeek. That's a process in the industry known as AI distillation, where essentially a means of training smaller AI models to mimic larger ones, larger, more sophisticated ones. And that's common in the industry. But now it's raising the question, obviously, whether this has allowed a national security threat to prevail using distillation. But the investigation by the FBI and the White House is separate from that. Now, DeepSeek was asked for comment. They have not yet commented on this. Nvidia, though, has put out a statement. A spokesperson in a statement says the company, quote, insists that our partners comply with all applicable laws, and if we receive any information to the contrary, we will act accordingly. Of course, there have been a number of different chips that have been banned by the Biden administration, and then subsequently other chips have been banned. H100, the most powerful accelerator, has been banned. H800 was originally designed for sale in China, and researchers from DeepSeek have indicated, even though DeepSeek hasn't confirmed that the H800 was used in version 3 of the R1 chatbot, but researchers have indicated that they used the H800, which has been subsequently banned by the Biden administration. So that would potentially, if that's the chips that they were getting, depends on when, again, would be in violation of those export controls. There's another chip, H20, which is under review. It's a less capable chip than the H800, but it's under review potentially by the White House for a ban as well. But again, keep in mind, there's a change in administration now, so policies have changed as well.
Yeah, Bloomberg's chief North Asia correspondent Stephen Engel, as we continue to watch those policies coming from the Trump administration. And of course, we're watching the developments around the volatility that we've seen in the markets because of these capabilities that we're now learning about DeepSeek's AI. Investors we've surveyed believing that this emergence of the Chinese startup will have little to no impact on the performance of the Magnificent Seven. A majority in our Bloomberg MLIV Pulse poll are not planning to change their exposure to the S&P 500, which is dominated by big tech companies. 59% of respondents see President Trump's policies as the main driver of equity volatility this year. U.S. value stocks are also seen as a new haven, with 39% preferring them over treasuries or the U.S. dollar. We've been, of course, following these tech names across South Korea as well. They've come back from holidays. We're watching SK Hynix, a key supplier to Nvidia, tumbling in today's session after the Lunar New Year holidays. China's DeepSeek, of course, has shocked the AI world. We also got Samsung's chip division reporting a smaller than expected profit. It's fighting to catch up with SK Hynix at this point. Bloomberg Intelligence senior tech analyst Masahiro Wakasugi joins us for more on this. And Masahiro, let me start with sort of the capabilities of DeepSeek and what sort of challenges they could pose to the likes of SK Hynix or Samsung at this point.
Yes, if we look at the DeepSeek's capability, it may cause some disruption. I mean, the supply chain, but basically, we have to resolve the many problems going forward. That a lot of more difficult problems, and by AI. So we think if we look at the long-term basis, the new AI development is good for the industry. And I think that if we adopt more AI for the real world, that will create more demand for the semiconductor. So basically, we think actually the new development AI software should be positive for the chip industry as well as equipment industry. So in the near term, the supply chain like Nvidia, SK Hynix could be changed a little bit. But basically, if we look at the broader picture, the overall industry will have the kind of more benefit for the AI development.
And today's big news also was that Bloomberg has learned that Samsung has obtained that approval coming from Nvidia when it comes to specifically 8-layer HBM3Es, right? A less advanced variety in this sector. What does that mean for its catch-up to SK Hynix and becoming a big enough supplier for Nvidia?
Mm-hmm. So if we just look at the Nvidia business, probably HBM3 12 high should be necessary instead of 8 high. Of course, 8 high is a good product. So if we look at that maybe situation, probably SK Hynix or maybe Micron should be the major supplier for Nvidia going forward. And so Samsung should be able to be approved for the 12 high product. So the competitive landscape will not change very much for the Nvidia supply chain. But if we look at other supply chain, probably Samsung today reported their HBM revenue jumped 90% Q on Q in the December quarter. So meaning that probably some other customers will use Samsung 12 8 high or even 12 high products going forward. So in that sense, maybe Samsung may be gradually catching up with the industry, I guess.
Bloomberg Intelligence Technology senior analyst Masahiro Wakasugi with that perspective on the broader chip sector. Let's now bring in Martin Yang, senior analyst at Oppenheimer as well, because we also had, of course, Apple's results today. We have seen that incredible rally after hours that have sent U.S. futures higher because of that positive revenue outlook. Martin, it's great to have you with us. And one feature, of course, that was talked about today was Apple Intelligence and perhaps some of the optimism and encouraging signs that we're seeing in that sector as we see these advances in AI. How do you expect this to really affect the broader markets?
Yeah, I don't think Apple's results will have as a broad read-through to AI-related stock is not as relevant. Tim did mention that regions with AI, Apple Intelligence rolled out does see higher sales momentum for iPhone, but we believe right now the data points is too few and far between, and Apple Intelligence is not fully rolled out, and it's in very limited regional rollout. So I don't think that's enough confidence for investors to go all in on AI-related hardware and build a newfound confidence on AI and its impact on consumer hardware.
So what do you make of the results today coming from Apple?
So the two main points. One is it does proves investors' fear that Apple has continued to lose share in China, and we haven't seen any meaningful signs of recovery there. And number two is I think the guidance for a March quarter is a little bit better than expected, but I think that's a number of factors goes into a little bit better than expected outlook, including inventory, new product launches, as well as some of the timing difference for Apple Intelligence rollout.
And of course, we were really watching their performance when it comes to China. Take a listen to what Tim Cook had to say. It seems we don't have that soundbite available at the moment, but we were watching very closely that revenue coming from China because it's plunged 11%. How significant is this business for Apple, especially when it comes to their future growth?
Very critical. So we know that Apple, the past product cycles, iPhone 12 through iPhone 14, was driven a lot due to the demand from China. And Apple has peaked its market share during COVID, and since then has given the share gain back to local brands. I think the key issue we are watching to see if there's any hope of recovery for Apple's market share in China is number one, is Huawei going to continue to gain share over overseas brands, and number two is just a rollout of local on-device AI agents or AI apps. Or integrated into the local operating system, whether or not that can be effective as a competitors against Apple Intelligence once it's fully implemented in China.
What are we seeing to be the implications when it comes to the increasing rivalry in tech and those U.S. export controls on China when it comes to the business that Apple is doing in China and also for its future development when making progress in these new devices that use AI?
Yeah, I think there are a couple angles. One is increasing tighter export controls from U.S. to China is going to put the hardware vendors in China at a disadvantage, namely Huawei. Huawei's chip is a few years older than Apple's, and that will show in power consumption and a lot of the high-end compute and gaming functions, and that will give Huawei a unfortunate disadvantage. And we don't know if that can be applied to other competitors in China. And as for AI, I don't think export controls will pose a significant disadvantage to the local competitors because there's an increasing use of open source models trained on the most advanced US hardware. But those open source models really has no restriction on where they are applied. So I think the Chinese players will be able to tap into the most advanced software and services enabled by AI.
This enormous focus that we're seeing on DeepSeek has really roiled markets. Do you think the bubble has burst now when it comes to the incredible valuations on the Magnificent Seven and that we could see also more opportunities in Chinese tech as well?
Not at all. I don't think the bubble is burst, so to speak. It may create internal discussions at Mag 7 on the pace of investment in the very near term, but we're still very, very early in the adoption of Gen AI across consumer and commercial markets. So I don't think that investment cycle has ended, and we're just getting started.
Where do you see the next opportunities? Are we going to see a broadening out, especially when it comes to more software focus, or are we still going to see that rally continue because valuations are still frothy?
Yeah, I do believe that most of the investors we spoke to in the near term are switching their focus from hardware optical components to software, especially to vertical software, where I do think the implementation of AI agents will see the most compelling results and most consumer benefit to within vertical software names.
Right, Martin Yang, senior analyst at Oppenheimer. Was really good to get your insights when it comes to the broader tech sector and, of course, the DeepSeek uncertainty that we're seeing in the Magnificent Seven. Not to mention, of course, the Apple results that we also got. Still ahead this hour, Endowus CIO Hugh Chung tells us why the latest disruptions in the tech sector are a positive development. He joins us later with his insights on DeepSeek and his market's outlook. Much more. U.S. investigators have found the black box flight recorders from the American Airlines jet that crashed in Washington after a mid-air collision with a U.S. Army Black Hawk helicopter. 67 people were killed in one of the deadliest U.S. air disasters in decades. Let's bring in our aviation reporter, Danny Lee, who has been following the latest developments. Danny, what do we know at this point about what caused this accident?
Well, first we have the black boxes that have been found from the American Airlines regional jet. This is the flight data recorder and the cockpit voice recorder. These are key pieces of evidence that will help try to establish and understand the minutes and even the seconds before this awful, horrific mid-air collision with this Black Hawk helicopter. Now, it's going to be interesting to try and understand, particularly for the investigators, the kind of conversations pilots were having with air traffic control. Did they receive any warnings or any caution prior to their landing and as they navigated the Potomac River, which is a very busy piece of airspace where you have commercial jets and military jets engaging and conflicting all the time in terms of movements. And particularly, what did the pilots potentially see in the seconds before this disaster? So it's going to be really important for the investigators and the hours and the weeks and months ahead to try and unpick this key piece of evidence. We're yet to see if we find any more bits of evidence like this, particularly from the Black Hawk helicopter. But, as the recriminations of this, one of the worst air disasters in US history over the past couple of decades, this has kind of been a real wake-up call for what has happened over the past 24 hours or so, given US air safety is considered very, very safe.
President Trump already pointing the finger at DEI programs at the FAA. I mean, we don't know the details of what caused this crash. What is the president saying?
Well, President Trump, he has been pushing this line, this mantra about diversity and inclusion being a huge roadblock or a piece that has always been really used by the previous Biden administration to favor minorities, other races. And so clearly him trying to push this agenda that there was a fault here, although Trump admitted there was no evidence, it kind of muddies the water because the National Transportation Safety Board, which is the sole agency trying to understand what has happened and potentially give some recommendations in the future, will want to have its formal say about what has happened. So, yeah, there's been a lot of political reaction, at least over the past 24 hours as well. But unfortunately for the 67 people that perished and the families, there's no consolation given the bickering in Washington.
Am I correct in thinking right now that we have seen more deadly plane incidents in the past year than before?
Yeah, I mean, there has been a huge focus on aviation safety of late, particularly in this region of the world, frankly. After the terrible Jeju Air disaster only a few weeks ago, and before that last year in Japan with the Japan Airlines collision at Haneda Airport. There's such a big focus these days on aviation safety, given 2023 itself was a remarkably safe year. I think these turn out to be more outliers more than anything, but even in the US, given how busy something like Washington Reagan National Airport was, we've seen warning signs over the past couple of years in the US as the industry has recovered from COVID, just the stress there is on the industry because of the shortage of air traffic controllers and how busy the aviation system is in the US, and the near misses we've seen in the US is a real reminder of ensuring that there is more caution taken and more care taken in the aviation industry at large.
Bloomberg transport reporter Danny Lee there with the latest on all of the plane tragedies that we've seen in the past year. But looking at some of the other stories that we're tracking today, the European Union has resuspended its case against China at the World Trade Organization over allegations of economic coercion targeting Lithuania. The case was first filed in 2022 after Beijing imposed trade restrictions on Lithuania due to its official contact with Taiwan. The EU had suspended the case in 2024, but resumed it last week to prevent the case from lapsing. President Trump has insisted that Egypt and Jordan will take in Palestinians from Gaza, despite both countries rejecting the idea. Meanwhile, Israel has released another 110 Palestinian prisoners under the ceasefire deal after a brief delay over the safety of Israeli hostages. The next hostage prisoner swap is expected to go ahead on Saturday as planned. And of course, we continue to follow the latest developments around President Trump and his tariff threats. He says he will follow through with 25% levies on Canada and Mexico starting Saturday, and that China is going to end up paying a tariff as well.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. Number one is the people that have poured into our country so horribly and so much. Number two are the drugs, fentanyl, and everything else that have come into the country. And number three are the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
Bloomberg's news desk editor Jill Deasy joins us for more on this. So what do we know about these tariffs, and also potentially that we could see more tariffs on China as well?
Yes, that's right, Sherry. So what we know about these Mexico and Canada tariffs, this is what Trump has really been telegraphing here for a couple of weeks, this idea of 25% tariffs on some $900 billion worth of goods involved in this type of exchange. There's still, though, a lot that's unclear here, particularly whether any of this is connected to Canadian crude oil. That's a really, really important oil. While the U.S. obviously produces a lot of its own oil, there's a lot of refiners, particularly in the Midwest, that really rely on Canadian crude. Not entirely clear whether that's actually going to be swept up in these tariffs that Trump is talking about right now. He actually said just a little bit ago that they might decide on that probably tonight, U.S. time, obviously, although we haven't really heard much from the U.S. president at this point on that front. So again, that's a really, really big one that we're looking out for. On China, again, still waiting to see what exactly happens, with potential tariffs on China. Trump floated the idea just a few days ago that there could be some 10% tariffs on China to start. There's a lot of, analysts that kind of thought that that was quite a bit less than, or at least less aggressive than what Trump originally had said. But again, still no clarity on when exactly that may go into effect.
Jill Deasy's Bloomberg's news desk editor there with potentially those tariffs coming from the Trump administration. And still ahead, after a chaotic week of trading, central bank decisions, and DeepSeek's emergence, Endowus CIO Hugh Chung joins us next. This is Bloomberg. Welcome back. You're watching Insight. Asian equities under pressure right now. We're being led lower by utilities and technology stocks, but still, we're headed for the first monthly advance since September when Chinese policymakers unveiled new stimulus. Of course, some of those tech stocks are playing catch down on that uncertainty coming from Chinese startup DeepSeek and its AI capacity. So we are seeing some of those Korean names like SK Hynix as well as Samsung leading the declines. And of course, we also have some concerns around tariffs that could potentially come on Saturday. Take a look at some of those currencies where we saw big volatility volatility in the Mexican peso and the Canadian loonie. Right now, we're seeing a little bit of upside and perhaps a rebound for the Mexican peso, but this is after losing more than 1% in the previous session. We have seen the Mexican peso held up relatively well this month, but 2024 has been its worst year against the dollar since the global financial crisis. And of course, we're now hearing that potentially we could see those 25% tariffs being applied on Mexico and Canada starting from Saturday. Our next guest thinks that Trump's tariff announcements as more of negotiation tactics versus actual implementation. Let's bring in Hugh Chung, CIO of Endowus, a digital wealth platform with over $7 billion in client assets under advice. It's great to have you with us, Hugh. So are you bracing yourself for what could happen on Saturday, or you think we've already mostly priced in these tariff threats and perhaps this is more of a negotiation tactic, as you say?
Yes, good morning, Sherry. Happy Lunar New Year. I think it's really more a negotiation tactic. We've actually expected quite a lot of risk of tariff increases even before inauguration, and right after inauguration, we've actually seen that some of the steps have been more measured, and you can see that from the markets as well. The 10-year yields have actually come off. And the dollar has actually weakened somewhat as well. So I think the market is also expecting a lot of the risks around tariffs to have been priced in, and that's the way I think as well.
But I guess the question right now is what macroeconomic impact Trump's policies could have. Do you worry at all that we could see that inflationary boost coming and potentially derail the FOMC? We have seen them hold rates this week, but what happens next?
Yes, I think that's really been the key focus of the markets with regards to the rates market. If you look at what the FOMC did recently, the Chair Powell's stance has been very clear that that there's probably not going to be a rate cut anytime soon. They've used the word not in a hurry multiple times. But having said that, to a question from the press, they answered that the policy is still quite restrictive, which implies that there will be a rate cut down the road this year. And it's obviously because you have to see whether the inflation numbers will continue to come down. And as you suggested, there is a risk that tariffs by the U.S. to China and other markets could flare up inflation again. But from what we've seen now, I think the numbers are continuing to actually be relatively in line with what the market expected in the past. And I think that will be more or less what will happen as well. So, like I said, I think Trump is very, very focused on, doing what's right for the people. So I think being very market friendly and being very cautious of inflation is something that is very, very important to this regime. So I don't think there will be a very large, spike up in inflation.
Does that mean that we will not see a readjustment towards perhaps broader upside and perhaps less concentration in these very few names? There was a thought that perhaps given the market risks that we would see more diversification away from the Magnificent Seven.
Yeah, I think that's a very interesting point, Sherry. I mean, I think that ties in really well with the recent development of DeepSeek and what it really meant for the markets. I really think that DeepSeek was a wake-up call to really not put all your eggs in one basket. I think the market has been very, very focused on a handful of names, and particularly for AI semiconductor names as well. And with this kind of progress, I feel that it's actually quite deflationary for pricing, which would actually improve demand and improve the adoption of AI, which is actually quite positive for the market. So on balance, I feel like this is very positive for the markets, and it also triggers people to diversify away from just a handful of names within tech to broader segments of tech in software and enablers as well, but even outside of tech that bring in adoption of AI and increased productivity. So I actually do think that is overall quite deflationary, but also positive for markets as well, and really another reason why I don't think inflation will spike up A lot.
Are you also positive about some of those Asian names like SK Hynix, Samsung, TSMC, for example, that supply those advanced chips, given that if we do see more cost-efficient AI skills coming from these companies like DeepSeek, that they might not need as many chips as we originally thought?
Yeah, so I can't comment specifically on the Asian semiconductor sector, but overall, I do think that there's been an overly high focus on hardware overall, and therefore I think that the spillover effect will be more positive for software enablers as well. So I think what is kind of drawn down in the pricing going down will be more than made up by the adoption and the demand picking up as well. So again, as an overall macro implication from DeepSeek and increases of adoptivity, I think that's actually positive for the overall markets.
I know that you're not as concerned about the macroeconomic changes coming because of inflationary policies from the Trump administration, but what about those geopolitical jabs that we continue to see? President Trump now saying that he requires a commitment from BRICS countries that they will not replace the dollar. So if we continue to see this push for U.S. dollar supremacy, what would a stronger dollar mean for Asian currencies and also for their markets?
Yes, absolutely. So the stronger U.S. dollar currency is really a pressure point for the Asian markets to perform, and given the relative strength of the U.S. economy relative to the regions like Europe and other markets, I mean that kind of strength in the U.S. dollar will likely continue. So it will likely dampen some of the relative performance of the Asian markets just purely from a currency perspective. Having said that, the dollar is, the DXY index, for example, is at its, close to its 20-year highs, and a lot of that move has actually happened over the last, quarter or so. So a lot of that is priced in, I believe, and that's why, with a lot of rhetoric and a lot of news flow that's coming out, I think we should kind of tune out the news a little bit and really focus on the actual fundamental drivers, particularly in the Asian markets as well. And if you consider valuations, I think there is still a pretty strong case to diversify outside of U.S. equities into Asian equities as well.
How do you like Japan? Of course, we are seeing a little bit of a stronger Japanese yen, but with the rate divergence with the U.S., with safe haven flows as well, there's a lot of uncertainty whether the equity rally that we've seen in the Japanese markets could continue.
Yeah, I think, obviously a very big part of the Japanese market is, whether the kind of, improvement in shareholder reform as well as ROE gains will continue. I think on the yen side, the BOJ has made it very clear that they are, less concerned about deflationary or going back to deflationary forces. So, I think the rate kind of hike cycle will continue, albeit at a gradual pace. So it's really trying to focus on the actual Japanese domestic economic development as well as the reform that will continue as well. So again, I think if you consider it from a multi-asset perspective or a multi-region perspective, Japan is still a very, very important market, other than the U.S. in terms of developed markets, that it's liquid and it's also going through its own development as well. So, with kind of a fairly stable and, predictable outlook on the yen and what the BOJ is trying to do, I still do think that Japan is a market that we should continue to consider.
Hugh Chung, CIO of Endowus, is sticking around. We do want to talk about India because we continue to see that sell-off in the market since October of last year. Coming up, India set to unveil also its budget tomorrow with tax cuts possibly on the agenda as the government looks to boost consumption. HSBC chief India economist Pranjul Bhandari joins us for a preview next. This is Bloomberg. India's government is set to present its budget on Saturday, the first of Prime Minister Modi's third term. The spending plan is expected to focus on efforts to boost consumption as the government tries to stave off an economic slowdown. Bloomberg's Haslinda Amin has more.
For 3 years, the Indian economy bounced back from the COVID-19 pandemic with 8% average growth. Now, the world's most populous nation faces a deepening slowdown. Was the 3-year boom just a blip rather than the start of a new era? India's finance minister says it's the weak growth that's a blip. But investors have already turned bearish. A Bloomberg survey found a majority of strategists and fund managers expect the Nifty 50 index to drop at least 5% in the 3 months through March. Putting high growth back on track is top of the agenda for the Reserve Bank of India's new governor.
The huge responsibility that we have in ensuring that the growth that this country actually has, that continues.
But as Sanjay Malhotra's move from the finance ministry to the central bank boosted bets on a rate cut, the Indian rupee dropped to a record low against the US dollar. This economic pressure comes less than a year after Narendra Modi's Bharatiya Janata Party lost ground in parliament, largely over bread and butter economic worries. Over 2025, Modi will face new and familiar challenges at home and abroad. The BJP will contest provincial elections in Delhi, the national capital, and the electorally important state of Bihar.
I, Donald John Trump, do solemnly swear that I
Then, there's the return of Trump. The US president has been keeping a close eye on India's trade policies.
The biggest charger of all is India. India's a very big charger.
Protectionist counter-punches would hurt an economy that needs exports to grow as Modi continues to set ambitious goals even after the slowdown.
By the end of the next decade, India will surpass the $10 trillion mark.
2 years ago, Modi was enjoying India's moment in the sun. In 2025, Asia's third largest economy may need a reset. Haslinda Amin, Bloomberg News.
Let's bring in Pranjul Bhandari, chief India economist at HSBC, who believes the government will likely outperform their fiscal consolidation target. Endowus CIO Hugh Chung is still with us as well. But Pranjul, let me start with you because we have seen the election year really not allowing the government to spend as much as they wanted. So how big of a fiscal boost do they need now in order to get out of their economic slump?
Yeah, thank you for having me. And that's a great question. Look, my sense is that growth is not going to come from a big government stimulus, simply because the government is following the fiscal consolidation path. It has promised to bring down the fiscal deficit further from 4.9 to 4.5% in the next 12 months. And that will really limit the room for a fiscal stimulus. But I think there are two things which are still there to boost growth. Number one, within the small sort of pie of expenditure that they have, they can reallocate better. Last year they couldn't do too much of CapEx. They can really speed up CapEx now. CapEx gets you jobs in the short run, and it gets you, better infrastructure in the medium term. Both are good for growth. So I think that's sort of one leeway that the government has. And the other leeway is actually monetary policy. Inflation is falling. We're expecting the next inflation print to be at the 4% inflation target. And the new governor has already started to give a lot more domestic liquidity. He can cut rates. He can ease a lot of the regulatory burdens that were put on the financial sector last year. And he can also, keep the rupee flexible, which will be good for India's export competitiveness. So I think there's a lot that can be done to boost growth, but it may not be just higher government spending.
Hugh, we have seen that pessimism over the Indian economy leading to that sell-off. I think we're in correction territory since the fall of last year. Could this expectation of more fiscal spending or perhaps RBI getting involved when it comes to cutting rates help sustain some of that momentum in this stock market?
Yeah, I think we need to take a step back and really look at India in the context of Asia, but also global markets. I mean, India is still the fastest growing large economy in the world, despite the slowdown that we've seen, which was really as a factor of the fiscal consolidation that we've been seeing. And therefore, it's important that it's still organically growing. It's also a lot of domestic-driven growth as well. And from that perspective, I do think that at some point interest will come back. If you look at the valuations, the common pushback from investors has been that valuations has been expensive, and it is still trading at higher than the average rate in the 10 years, but it has come back quite a bit from the peak. So I do think that if we see some stabilization in the fiscal consolidation and more visibility of growth stabilizing, the interest will come back in the Indian markets.
Oh, Hugh, where do you see that interest coming back? Because we have seen this huge ramp up in some of those stocks linked to the made in India or make in India theme, like the industrials, the utilities, for example, doing very well and also becoming a bit frothier because of it. Will we see a sector rotation toward more attractive parts of this Indian stock market?
Yeah, I think over the last few years, as you've rightly pointed out, there's been a very interesting development in the Indian markets. The traditional, kind of high-quality companies, so to speak, were not the drivers, of the move in the market. It's really been, some of the SOE, some of the energy, some of the, different industries as well, which is actually one of the ones that have been hit recently. So there is an element of sector rotation, that is coming. But again, I think the core thesis within India is really the organic growth that we're seeing, the demographics, the mid to long term growth of the economy itself. So in the short term, yes, I think we do expect some sector rotation to continue, and the interest will be probably around the IT services and some of the large companies that have historically done well. But I think mid to long term, I mean, the domestic economy as a whole should be the ones driving the overall market.
Pranjul, what sort of concerns are there around potential geopolitical tensions, especially as we continue to see President Trump ramping up tariff talks? Metals could be the next target as well. And of course, that affects India. Blanket tariffs could affect India. Are all of these going to be considerations for policymakers there?
I do think yes. And, there are a lot of uncertainties on where the tariff policies could go. My sense is that if India can really, be ready to do more business and not become protectionist at a time when the world is becoming protectionist, it has a lot to gain. And a couple of things that we can see in this budget and also the RBI policy that follows next week. Number one, keeping the rupee more flexible than it has in the last year, which is great for trade competitiveness. Number two, in the budget, which is coming up tomorrow, we can actually have a very sort of interesting import duty rationalization where the general sense is to bring down import tariffs and to be less protectionist, as the world becomes more protectionist. And number three, go ahead and sign FTAs with countries like the United States of America, which I think can benefit India's trade prospects and can also benefit the US, and it can be a win-win. So my sense is that yes, even though there is this tariff talk, which is putting a cloud around the world, India can do the right things and be more open to business, and the budget can actually signal that.
Pranjul, Prime Minister Modi has not necessarily had the best track record when it comes to avoiding these protectionist policies during his administration. So where are some of the areas that he could give in order to open up the Indian market more and continue with those transactions with foreign countries? And what are we seeing in terms of FDI investments into India as well that could be a potential opportunity for the country?
Yes, you're right that we've actually in India just been seeing a rise in import tariffs, average import tariffs. And this is the change which, I think can come about in the budget tomorrow, which is showing the first signs that India actually wants to bring down some of its, import tariffs and also its non-tax tariffs in order to become more open to business and plug into the Asian supply chains as they get rejigged even further over the next couple of months. So I think this could be an important change that we see. I think one of the areas we'll see would be on, input goods, input intermediary goods, which could send this right signal. In terms of FDI, in the last couple of years, India got a lot of FDI in high-tech sectors like data centers, solar panels, semiconductors, but that has started to come off. Where India hasn't been able to get a lot of FDI has been in the mid-tech sectors like textiles, furniture, footwear, all these industries that create jobs. So if India can be open to business on that front, it can not only get FDI, but it can also create jobs and get good growth going. And I do think all of this will be there in the budget tomorrow, at least the first steps.
Hugh, just as Pranjul mentioned, tech has been one of the big gainers, even in the stock market, as outperformers when it comes to Indian stocks. Do you expect this to continue, or could we see other areas that are going to be of more interest in 2025?
Yeah, I think that trend will probably continue, especially if there is, like Pranjul mentioned, more flexibility around the rupee. As well, given, obviously that's going to be beneficial for that sector. But I think it's really, how other sectors, kind of perform in terms of their fundamentals. That's really important. So over the near term, these IT services sectors were the ones that were most competitive, from a global perspective. And so that will probably be where I think investors will have the most comfort over the short term.
And Pranjul, just shortly and lastly, we have seen, of course, India being thought as an alternative to China. Are you seeing more of that supply chain, perhaps redirection into India that could potentially support the economy?
Well, I'll be honest. I think what I'm seeing very clearly is that India is becoming an important producer of high-tech goods and services, from mobile phones to drugs and pharma, to global services and professional services exports, where India is almost a global leader at this point of time. But where it is not really doing as well is the mid-tech sectors that I was talking about, the ones which are more labor intensive, like textiles, footwear, food processing, where there's a lot of scope for India to be more welcoming of FDI, which probably it hasn't been in the past, to have lower tariffs and basically to plug into the Asian supply chains, which it hasn't. So I think mid-tech is very important.
Pranjul, Bhandari, really good to have you with us, joining us from HSBC, and of course, Endowus CIO Hugh Chung also with their views on the markets. As we continue to follow the Indian trading session, we're seeing a little bit of a rebound of 0.3% on the Nifty. Of course, we have seen a big sell-off since October. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.